Welcome to the first installment of a new series we're calling the Freelancer Finance Lunch Hour.
Where they were there 10 minutes and not 3 hours of talking. We're going to talk about Zillow.
Yeah, we have to discuss what's happening with Zillow lately.
Please like and subscribe. The buttons are right there. It takes 1 second, right?
And you know what? Hit the bell.
Ding, ding, ding.
I'm going to ask you to look at your crystal ball. What do you think we're going to see when it comes to demand and then subsequent pricing for homes here in the United States?
The market is going to continue to be strong here through the rest of the year and well into 2022. We have some really strong tailwinds that are going to make it so, which is these millennials. We've talked about them a lot. This, huge generation of folks who are starting just to buy their homes and starting to move. We have low mortgage rates. And then we also have remote work, which is a really big foundational block of moving. And we think there's a lot of pent up demand in that right now, and that this rebalancing will also continue and make it a good space for both buyers and sellers.
Zillow is basically becoming a monopoly in real estate. If they're not there yet, they are on their way to becoming a monopoly, meaning you have to advertise with them. You're going to get mortgages with them. You have to possibly buy houses through them at some point.
And even the rental market now, rental
market. So you're talking about this massive monopoly that's developing. And I'm not saying this in a negative way. I'm saying this, if you bought Apple and Microsoft and Google, all of these guys before they were the monopoly that we know now, basically, you did pretty well, right?
Well, we did the math. Wasn't it like $60,000 in Apple in the 80s before the iPhone would be?
I think in the 90s. In the 90s.
Okay, in the 90s would be 73 million today. The multiplier that these sorts of companies have is ridiculous when you get in early. And if you can't get in early, then the next best thing is to find the lowest of the low that you possibly can, go as big as you can, and then wait for the company to mature.
Yeah, $22 billion. So, if you're not following market cap, that for a company that's growing as fast as Zillow, that is still a good price to buy.
What's Apple's market cap? $2.35 trillion. What's Microsoft? $2.13 trillion. $22 billion seems like a lot of money until you consider the fact that other major, massive monopolies are in the trillions now.
This is a profitable company. They have an actual, the P is large, it's 81, but they're a profitable company. So we're not buying something that's not profitable. We might be overpaying for the growth. That might be true, but it is making money. It's literally breaking down at support levels. So this last support level was at like around $90, 89 and change. And we're underneath it now.
This thing is in a absolute free fall. The 200 days at 104, right?
Well, it's worse. It's the 200 days here at 107, and at the 300 day, it's also below that. So here it is at 104. So they're roughly together now.
Well below.
Let me show the weekly again, just to show you the whole chart up and to the right. Right. So you could have bought it if you bought it IPO day, $30, you'd have overpaid. It fell down to 16. Now we're talking about buying it at $80.
80, $90 IPO.
We ran up, way beyond the 21 day even. So usually when a stock is bullish, it's above the 21 day. We discussed this many times. Mm-hmm. The 21 day, I'm going to go even closer. It's the orange line. So I'm sorry, it's a 20 day here. So you can see it was bouncing on it. So anyone tracking Zillow, it bounced up, went super high to 200. You see how far away it is from the 21 day?
That was 2 weeks, right? Those two candles. So within 2 weeks, it popped up.
Yeah, this is 1 week, 2 week, 3 weeks, 4 weeks, 5 weeks testing. After 5 weeks, it tested it, tried to hold it, broke down, tried to go above it, and broke down completely. And now we're on a free fall.
Now it's staircasing down the moving averages, which are at this point now inverted.
These are the moving averages for the green one is the 200 day.
This thing is upside down right now.
Yeah. When it tried to break out, I was like, oh no, is this trying to make a little bit of a run and break this trend line? Because I don't want it to break out just yet, because we're trying to buy more. We're
trying to get more, yeah.
So I was like, yes, when it tanked. And then I thought it might hold this. At the middle of the line, it's sort of in its fair value phase. When it's above on this purple line up here, it's overvalued. And when it's on the bottom of this guy, it's cheap. Let me put it this way. We can fall far. Right now, the next support is at $80. If it goes all the way down to here, we are sort of at the bottom of this purple main trend line. That's the bottom of the range that this usually trades in over the last couple of years. So this can go as low as, let's say, $65.
If you look, your $65 line, that bottom line of the trend line, the last time it hit that price looks like July of 2020. We all remember what the world was like.
Oh, you're talking about $65. Yeah.
Yeah. So if you see that it the last time it hit that price, it bounced around there for a while. There was a lot of activity there before it broke out. So if it does drop to that price, it's going to sit there for a minute. That should be a level of some solid support, because it looked like it did that from May through mid-July.
This is what's amazing about stocks. Just as investors, we should always keep in mind, everyone who was buying it here thought it would never see this again. And here we are with a possibility of seeing it again a year later. That's kind of crazy that we might see the same price that was a year and a half ago. It shows you these growth stocks are volatile, but look what happens if it stays in this channel. It doesn't completely collapse. We go up, we're back at $200, somewhere around here. If we wait, I think a year, I think it'll take around a year to get back to that $200. So look, is it an immediate 10X? Obviously not, but is that a great opportunity to buy at $65 and then wait a year and a half and have a $200 stock? I think that's a great opportunity.
When we discuss the incentive to invest in a certain stock, you also have to consider how that company makes money. I mean, a company like Tesla needs to create products and factories and have people and engineers, or a company like Apple needs to create phones, and there's a lot of research and R&D. What does Zillow do? They don't have shelves and shelves of products.
Well, hold on. Their main business now, not their main, but they're getting into it, is buying houses. They have inventory being accumulated. Yeah. Basically a year and a half ago, it was like 0 houses. Now it's around 3,800 and a quarter. Like, they're buying a lot of property.
But it's not like they have warehouses full of products.
Full of houses.
You know what I mean? They don't have a warehouse full of products that need space. They have to shelve it. I mean, the real estate market is arguably one of the biggest, if not the biggest market of all. Store of value, stocks, and real estate.
Equities and real estate, yes. What you discussed about profitability is actually very correct. They are a profitable company, and they have been beating Wall Street analysts' expectations. So here, they had 37 cents actual. This was in 2020, beat. Right? Then they had 41 cents versus 27 expected, then 44 versus 25 expected. So they're not making money hand over fist yet, because their businesses like buying properties is still growing, but they're already a profitable company. They're already beating expectations a lot. Yeah. And it's basically, are we paying a higher multiple to get this growth? That's really what it is.
If they're buying a bunch of properties now, then they're doing the same thing as, say, a Tesla is by investing in gigafactories. They're reinvesting in their own business. Right. And then when they sell that, whatever quarters that they sell that, that's all going to be profit that's going to show on their balance sheet.
Right, exactly. And I think they're expecting only 5% for that real estate business. But imagine buying 100 billion of real estate and even getting 5% off of that. Yeah. It adds to the bottom line. That's the point. In terms of the chart, you can see where the RSI is pretty low for the.
I just can't believe that it's at 30.
Yeah, I mean, honestly, if you're DCAing now, it's a good time to DCA, but I still expect it to go into the 70s. So I have a position. I think you have a position, right? Yeah. And I think now we're just waiting for better opportunity. For me, it's under 80. That's what it is.
It just goes to show that a lot of people that had money on the sidelines made moves in Q3, Q4. But what is interesting, though, is that once we got into Q1, they're actually diverging. They're actually estimating even lower, they're going down. And they're overperforming 16 March.
35. This is the weekly RSI. Was in March of 2020, right? Right? Is that March 2020? Yeah, there you go. Which is funny.
Right at the start of the pandemic.
Right. So look at it going now. So we're not quite there, but 35 is coming up. So if you think that is a good position, that could be a good position to at least DCA into. Like if it hits 35 or 34, even if it could go lower, I think for me and you, that's probably a good place to buy.
Yeah, it's a spot that I wouldn't feel bad if it did go lower, because I would say that the fundamental or the technicals were telling me that it was a good move. A company like this doesn't have some of the negative catalysts that other standard product type companies would have. They're basically software, and we know that software just has the highest margins, so it's only going to get more profitable for them.
I agree, and we should keep an eye on this 200-week moving average too, because this might approach.
That might be the line. It might be.
That might be it. That it's 75. Sort of $75, $76. That is a great point to, like I said, DCA in. And if it falls down here to the 65, you're very lucky. You should just pick up more, honestly. And if you don't, something's wrong with you because you're not paying attention to what we've been talking about.
You're probably buying all that Dogecoin.
Stop buying Dogecoin.
Sell the Doge. No, this is not financial advice, but sell the Doge.
And buy Zillow. I mean, I'm really looking forward to this hitting $65, because it just represents such a big opportunity to go back to 200. from 65 that
It'd be a great ride.
I'm looking forward to the $65 to $75 range. The soldiers are sitting there, they're getting ready, like
hold.
Basically, like it's really hard not to spend money in the stock market, as you know,
because you're literally just throwing your money in there and nothing happens.
and it's burning.
I throw my money in there and it's just like a red day, everything red. But remember what some of January to like March felt like on some of those stocks. You're just getting yourself in an even better base.
So even if you bought when the weekly RSI is at around 35, you would always make money because it always goes up past that. Here you go. If we hit 35 and we're somewhere around this range, I don't see anywhere else. Honestly, there's even a pop to this green line, which is like the sort of the trending line of this.
That's $102.
84%, maybe 100% if you give it some time.
I've never been upset at a 100% return.
We want high quality companies in the long term. So that's why we invest in Tesla. It's a high quality company. And Zillow, I don't think anyone's talking about that they're not a high quality company, that they're not going to be around in 10 years. I think everyone's pretty much, do we pay this much money for it?
Zillow seems like it's beaten down right now, but it's actually looking really, really attractive. It might get more attractive, but it's still at this price. It's really good. If you're not looking at Zillow, this might be the time to take a second look.
Thanks for watching this episode. Obviously, please, we forgot to say like and subscribe.
If you like this content, like and subscribe. Dang it.